The economy is shifting under our feet, but here's the thing most people don't even notice. They'll wake up in a year or two and wonder, how did everything change so fast? By the time we wrap up 2025, 5 major economic shifts will already be in motion. And if you don't understand them, you risk being blindsided. But if you do understand them, there are opportunities waiting for you. Let's break it down. Shift number 1, the Federal Reserve shakeup. Now, the Federal Reserve isn't a typical bank, it's the central bank of the United States. They control interest rates, and yes, they have the power to literally create money out of thin air. That money then gets lent to the US government, which spends it on everything from healthcare to infrastructure. The problem: the government is already spending more than it collects in taxes. That gap is covered by borrowing, and when the Fed steps in, it means printing new dollars. Here's where the shakeup matters. In 2026, Jerome Powell's term as Fed chair comes to an end. And with President Trump pushing for officials who favor aggressive interest rate cuts, the leadership at the Fed is almost guaranteed to change. That means the rules of the game around money, lending, and inflation are about to be rewritten. Shift number 2, interest rates and borrowing. Interest rates are the price of money. They affect mortgages, car loans, credit cards, business expansion, literally everything. High rates slow the economy, low rates fuel it. Right now, the Fed has been hesitant to cut rates, worried about inflation. But political pressure is growing, and some members are already signaling they're ready to slash rates. If that happens, the government can refinance its enormous $37 trillion debt at lower costs, businesses can borrow more cheaply, and spending could surge. That sounds great, but it comes with risk, because when money gets cheaper, debt piles higher, and inflation can sneak back in. Shift number 3, the global currency battle. For decades, the US dollar has been king. It's been the world's reserve currency, used in trade and international security. But cracks are forming. Countries like China, Russia, and even India are working together under the BRICS alliance to reduce reliance on the dollar. They're even talking about creating new currencies potentially backed by gold or other hard assets. That's why we've seen gold prices climbing. Investors are hedging against the possibility that the dollar could lose its dominance. History shows that when confidence in the dollar weakens, gold becomes more attractive. And while the dollar isn't going anywhere overnight, this shift could slowly reshape the global financial order. Shift number 4, tariffs, taxes, and inflation. Earlier this year, new tariffs shook global markets. They're essentially extra taxes on imports, and while they raise revenue for the government, they also raise costs for businesses and consumers. Combine that with sweeping tax cuts at home, and you have a strange mix: less government revenue from traditional taxes but more reliance on tariffs and, of course, borrowing. The result: uncertainty. Businesses face higher costs, consumers face higher prices, and the government risks running even bigger deficits. Inflation remains the wild card here. Print more money, borrow more, and sooner or later prices climb. That's great for investors who own assets like stocks and real estate, but it squeezes the average family whose paycheck doesn't stretch as far. Shift number 5, debt stress. Finally, let's talk about the elephant in the room: the growing debt burden. Not just the national debt, but personal debt too. Credit card balances and auto loan delinquencies are climbing as Americans struggle with higher costs of living. And at the government level, the fastest growing expense isn't healthcare or defense, it's the interest payments on our $37 trillion debt. That means more of every tax dollar you pay goes straight towards servicing debt, not improving infrastructure or providing services. It's a cycle that puts constant pressure on the system. Lower rates might ease the burden, but they also encourage more borrowing, which can make the problem even bigger long term. These 5 shifts: the Fed shakeup, changes in interest rates, the global currency challenge, tariffs and taxes, and growing debt stress are not distant possibilities. They're already happening. The wealthy and financially savvy